morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Friday, August 19th. The global stock sell-off that began yesterday in Europe has now entered its second day. The U.S. market opened mostly lower, although it's well off the declines that futures had indicated earlier. Yesterday, we saw a drop of nearly 4% on the Dow, 4.5% on the S&P 500, and more than 5% on the Nasdaq. The major European markets saw comparable losses yesterday, and they're back down sharply again today. And it's a similar story in Asia. Stocks tumbled there overnight, led by a 6% slide in South Korea's Kospi index. Analysts are now concerned about slowing economic growth in that region as well. Deutsche Bank reduced its forecast for Chinese GDP to a 7% annual rate and said the potential for recession in Europe and the United States is now the biggest risk to China's economy. And in fact, economists at JP Morgan just cut their estimates for U.S. economic growth even further and warn that recession risks are, quote, clearly elevated. JP Morgan now projects fourth quarter GDP at just 1% versus a previous forecast of 2.5% growth.
Amid all this uncertainty and fear, investors are searching for safety in the markets. And since most analysts consider gold to be the ultimate safe haven investment, the precious metal has been the biggest beneficiary of the global flight to safety. Gold closed above $1,800 an ounce for the first time ever yesterday, and it's rising again today, now trading above $1,850 an ounce. But other commodities are suffering because along with stocks, they're considered to be riskier assets. That's especially true of oil, which would likely see a big reduction in demand in the case of another global economic slowdown. Right now, light sweet crude is dropping back around $81 a barrel. Meanwhile, the dollar is losing ground against most other major currencies, and U.S. Treasuries seem to be losing some of their safe haven appeal. The yield on the benchmark 10-year note is now rising back around 2.1%, rebounding from near a record low recently.
During sell-offs like this one, financial stocks are often the hardest hit. We're seeing that trend play out clearly in Europe, where the large banks have gotten slammed over the past 3 days. Barclays has fallen nearly 20% in London trading since Tuesday's close, and Societe Generale is down 17% in that time. Today's losses come after a Wall Street Journal report that U.S. regulators are stepping up their scrutiny of European banks' liquidity. Meanwhile, a Swedish regulator reportedly warned the banks that they should do more to prepare for a funding crisis. Financial stocks are also taking a beating on Wall Street. Citigroup is falling 3%, on top of yesterday's more than 6% slide. And Wells Fargo is down nearly 2% after a nearly 5% decline yesterday. Meanwhile, Bank of America is losing 1.5%. The Wall Street Journal and the New York Times reported that the largest U.S. bank will cut 3,500 jobs this quarter as part of a restructuring plan that could eventually result in more than 10,000 layoffs, or 3.5% of Bank of America's current workforce.
A couple other stocks are likely to be in focus today. Hewlett-Packard is tumbling more than 20% following its earnings report last night. In addition to missing estimates for the latest quarter, the technology giant also surprised investors by cutting its sales outlook for the full year. HP also indicated it may spin off its PC business and said it is discontinuing operations for web OS devices, including smartphones and its touchpad tablet computer. A wave of analyst downgrades and price target cuts on HP's stock followed the report. And finally, keep an eye on shares of Barnes & Noble today. It announced that Liberty Media bought an additional stake in the bookstore chain worth more than $200 million. That brings Liberty's control of the company to about 17%. Both Barnes & Noble and Liberty shares are dropping on the news. That's the latest from Weiss Research. Have a great trading day and a fabulous weekend.